as you referenced, there's a Senate Banking Committee hearing today. We are advocating as an industry to be regulated.
5-cent breakout line, a move that could signal the end of the recent volatility and the start of a new directional advance.
Now, wait, did I just see what I think I saw? That feeling, that little internal jolt, is exactly what I felt the moment I finished the XRP video we just watched. Because buried inside all the noise, the charts, the predictions, the court updates, there is something bigger happening. Something quieter. Something most people will never notice until it's too late. And honestly, that's why we need to talk. Because the conversations around XRP today are loud. But the truth is sitting in the shadows. People keep asking, is $750 XRP even realistic? They say it with that tiny smirk, that be serious tone, that crypto is just a hobby mindset. But here's the part they don't understand. Price explosions never begin on the surface. They start behind closed doors. In balance sheets, in corridors of power, in systems normal people never see, but rely on every single day. So before we dive into the mechanics of a potential $750 XRP valuation, I want you to take a moment and actually breathe. Because this isn't a hype video. This isn't moon boy energy. This is about something more uncomfortable, something more real, something that is already happening whether people believe it or not. Let me paint the picture simply. Right now, the visible market is saying, XRP is slow. XRP is boring. XRP isn't moving. But the invisible market, the one that actually matters, is screaming, liquidity is tightening. Supply is thinning. Big players are positioning quietly. And retail has absolutely no idea what is coming. See, when people talk about supply, they think of the coins sitting in their wallet or what they see on CoinMarketCap. But that is not circulating supply. That is visible supply. The honest truth? There is XRP people will never touch again. There is XRP permanently lost. There is XRP locked in long-term custody. There is XRP institutions have already swallowed up without telling anyone. And there is XRP held by early whales who have zero intention of selling until the new financial rails are fully activated. You want to understand the $750 thesis? It starts right here with supply compression. Not later. Not one day. Right now. Let me ask you something simple. When a digital asset is designed to move global liquidity, settle institutional payments, handle cross-border flows, and replace the most outdated plumbing in finance, do you really think its price will behave like a normal retail coin? Do you think the price will be left to the mercy of traders pressing buttons on a weekend? Of course not. Because XRP's architecture doesn't care about speculation, cares about throughput, cares about efficiency. It cares about being the lubricant of a system that moves trillions of dollars every single day. And here's the wild part many people don't realize. When a currency becomes an institutional tool, its price doesn't rise because of hype. It rises because of utility pressure. Utility pressure is not sexy. It's not dramatic. It doesn't create fireworks. But it is relentless. It pushes price upward like a hydraulic press. Slow at first, invisible at first, then suddenly unstoppable. This is where the idea of a supply shock becomes real. Because imagine a world where banks, clearinghouses, payment providers, liquidity hubs, and entire corridors of international finance suddenly flip the switch and begin using XRP at scale. What happens if, at that exact same moment, there simply isn't enough XRP freely available on the market? It's simple. The price doesn't rise slowly. It jumps. It leaps. It gaps up because the system requires liquidity now, not later. And this is the part that shocks people when they hear it the first time. Utility-driven price targets are never small. They are never conservative. When something is built to support massive settlement systems, the price adjusts upward to meet demand, not the other way around. That's why the $750 conversation exists in the first place. Not because people are trying to hype XRP, but because when you study how settlement assets behave in the real world, historically, mathematically, and structurally, the valuation starts making uncomfortable sense. Think about gold. Nobody uses gold in daily life, yet trillions in value rely on gold reserves. Think about U.S. treasuries. Most people never touch them, but they underpin global liquidity. XRP's role is different, but the principle is the same. If the world needs it, the price must rise to match that need. Now let me give you a visual, something human, something simple. Imagine you walk into a store, and there's only one loaf of bread left, and 10 people want it. What happens? The price shoots up because the supply is tiny, but the demand is hot. Now take that image, but replace the bread with XRP. And replace the 10 people with global banks, remittance giants, and liquidity providers that move hundreds of billions of dollars daily. Now imagine that they suddenly need liquidity, not next year, not slowly, but instantly. Do you see the magnitude of the shift? Because when demand hits a fixed supply, the price moves violently. And that is why people who dismiss high XRP price targets simply don't understand how liquidity assets behave. They think XRP exists in the same category as meme coins. But XRP's entire architecture screams infrastructure. And infrastructure assets don't stay cheap once they're activated. We're talking about a digital asset built to handle massive transaction volumes, settle payments across borders, connect fragmented systems, and replace outdated financial plumbing that governments and corporations have complained about for decades. So before we move deeper into the mechanics of how a $750 valuation becomes possible, you need to understand one thing. XRP is not competing to be a popular coin. It's competing to be essential. And when something becomes essential to global liquidity, the market will reprice it, whether we're ready for it or not. When we talk about XRP, we're not talking about a normal crypto. We're not talking about a meme coin. We're not talking about a speculative gamble. We are talking about a liquidity asset that was designed with precision, almost surgical precision, to solve real-world problems that choke the global financial system every day. And as we build on the foundation we laid in Section 1, I want you to keep that same feeling from the XRP video we just watched. That little shockwave of realization. That moment where you think, wait, have we been looking at this the wrong way the whole time? Because here's the truth. The real story of XRP has never been about price. The real story has always been about function. And once you understand its function, the price stops looking unrealistic and starts looking inevitable. Let's talk about liquidity corridors, a phrase most people ignore because it sounds too complicated. But in reality, a liquidity corridor is just a path, a bridge, passageway where money moves. Right now, the bridges we use are slow, clogged, outdated, and unbelievably expensive. Anyone who has ever sent money internationally knows the pain. You pay fees, you wait days, you hope nothing goes wrong. And the worst part? The systems that handle these transfers were never designed for the level of global movement we have today. XRP was built for this exact bottleneck. Now, this is where things get interesting. When a new corridor opens, let's say between the US and Southeast Asia, the companies operating inside that corridor need liquidity. Not tomorrow, not next year. Immediately, they need a digital asset that can act as a universal translator for value. Something that both sides understand. Something neutral, scalable, fast, auditable, and stable in performance. And this is where the supply shock begins to take shape. See, when people hear supply shock, they imagine a sudden event, a dramatic announcement, a switch flipping. But supply shocks usually happen quietly, slowly, in the background, and then suddenly, boom, the world realizes liquidity has dried up. Let's break down how this happens step by step. Step 1. Institutional accumulation begins quietly. Banks, fintechs, remittance companies, they never announce when they start accumulating digital assets. They do it silently, in custody accounts, in off-exchange platforms, through private OTC desks. By the time the public sees movement on-chain, most of the accumulation has already been done. Step 2. Circulating supply becomes shrinking supply. Remember how in Section 1 we talked about the difference between visible supply and actual supply. This is where that concept explodes into reality. Out of XRP's total supply, only a fraction is truly available for retail trading. Another chunk is permanently gone. Lost wallets, burned keys, forgotten accounts. Another chunk sits locked in long-term institutional custody. Another chunk is held by large early whales who are not moving anything until the major corridors flip online. When you put these pieces together, you realize the real supply is much smaller than people think. Step 3. Utility demand begins before retail wakes up. This is the part nobody talks about because it's not exciting enough for headlines. Demand for XRP begins long before retail sees a single green candle. Banks don't wait for hype. Institutions don't wait for narrative. They start building with what works. And XRP works. Step 4. Liquidity stress creates sudden upward price pressure. This one is important. Imagine a corridor suddenly needs $5 billion in liquidity to settle cross-border flows. Meanwhile, maybe only $800 million worth of truly liquid XRP is available on the open market. What happens? The system panics. Buy walls appear instantly. Every available XRP is swallowed. And the price gaps up because liquidity must expand to meet demand. This is not speculation. This is math. Step 5. Retail enters late, causing acceleration. This is the classic pattern across every market in history. The people who don't understand the asset pile in after the utility kicks in. They chase. They follow the chart. They FOMO as the real driver, institutional liquidity, continues to escalate. This is how seemingly impossible price targets suddenly become not only possible but necessary. Now, let's connect all of this back to the $750 valuation. To settle global liquidity, an asset must reflect global value. That means the price needs to scale high enough to support multi-trillion-dollar corridors without needing ridiculous amounts of tokens per transaction. The higher the price, the smoother the settlement. A $750 XRP doesn't mean hype won. It means the system reached equilibrium. Let me say that again because it is the foundation of the entire discussion. A high XRP price isn't a luxury. It's a requirement for the system to function. Now, let me give you one more simple visual, again, something human, something real. Imagine you're fueling a jet. If you use tiny cups, you'll be standing there forever. If you use large containers, the job gets done quickly. XRP at low prices is like fueling a jet with tiny cups. It works, but it's not efficient at scale. XRP at high prices is like using massive containers. The system becomes smooth, fast, and reliable. This is why institutional assets tend to reprice upward aggressively when demand explodes. This is why banks don't worry about XRP's current price. Because they know price is not static. Price is elastic. Price adapts to utility. Price expands to fill the needs of the system using it. This is why the idea of a supply shock is not a fantasy. It's a structural outcome. But here's the part that people underestimate the most. By the time the supply shock is obvious, it's already too late. Because XRP does not need retail to move. It does not need hype to move. It does not need speculative mania to move. It needs one switch, one major corridor activation, one institutional liquidity requirement that exceeds available supply. When that moment comes, whether people believe in the $750 target or not, the system will decide the price, not emotion. And once the system decides, there is no going back. There's a moment, and if you've been in crypto long enough, you've felt this, where everything suddenly shifts. Not because the charts explode, not because influencers start shouting, but because the energy in the market changes. It's that moment when you can almost hear the gears turning behind the scenes. You look around and think, something is happening, and the public hasn't realized it yet. That's the exact moment we're stepping into with XRP right now. And it hits even harder when you remember the XRP video we just watched, because suddenly all the pieces line up. In this section, we're going to talk about the power structure behind this market. The part nobody wants to discuss. The part that makes some people uncomfortable. The part that explains why price targets like $750 aren't dreams. They are calculations. We're talking about control, timing, and strategic deployment. Let's start with something simple. 1. Markets don't move on truth, they move on permission. This is the part most retail investors misunderstand. A crypto asset doesn't explode because it deserves to. It doesn't explode because it has good tech. It doesn't explode because it has a strong community. It explodes when the people who control liquidity flows decide it's time. XRP is sitting in this strange space where the retail world sees a coin, but institutions see infrastructure. You see a chart on your phone, but they see a global settlement engine. This difference in perspective is exactly why the price doesn't reflect reality. Yet, because the system holding XRP back isn't the market, it's the timeline. 2. The timeline problem nobody talks about. Every major financial shift in history follows the same pattern: preparation, integration, regulation, activation, repricing. Most people only see that last step, repricing, and think it happened overnight. But the previous steps take years, sometimes decades. Let's break this down. Preparation. This happened years ago. White papers, partnerships, network design, building rails in silence. Integration. Banks and payment giants testing corridors behind the scenes. Private pilots. Sandbox environments. Those quiet announcements nobody pays attention to. Regulation. The courtroom battles. The political narratives. The classifications. The uncertainty washing out weak hands. Activation. This is what we're stepping into now. The moment when corridors stop being tested and start being used. Repricing. The final phase. The one everyone thinks they can buy into later, even though later is usually too late. XRP is moving from integration activation right now. That transition alone is enough to create seismic price movement. 3. Why retail still doesn't understand XRP's real purpose. It's not retail's fault. This market conditions people to chase candles, not utility. So when they look at XRP, they look for the same clues they use for meme coins and hype projects. But XRP doesn't behave like a retail coin. It behaves like a global monetary instrument. Let's simplify this even more. If you put a meme coin in your wallet, it stays there until you sell. If you put XRP into the global payment system, it doesn't stay still. It moves. It circulates. It becomes part of a global engine. This distinction is why XRP's price potential is so extreme. It's not a token sitting in someone's cold wallet. It's a liquidity tool. And liquidity tools don't need millions of holders. They need deep liquidity at high value. High value meaning high price. 4. The price doesn't go up because people buy, it goes up because institutions need it to. This is the hardest red pill for people to swallow. XRP won't reach $750 because retail investors push it there. It will reach $750 because the system requires it. Let's explain this in a way that's easy to visualize. Imagine a bridge that needs to support 10,000 tons of weight. If the bridge is too weak, everything collapses. So the only way to support that weight is to make the bridge stronger. In the world of settlement, price equals strength. A high-value XRP can support massive global transfers. A low-value XRP cannot. So when settlement volume demands a stronger bridge, the price adjusts. It's not emotional. It's not speculative. It's architectural. This is why the idea of a supply shock is not a conspiracy. It's a mechanical necessity. 5. The quiet accumulators don't want retail to understand this. If you were a bank accumulating XRP, if you were a payment giant quietly preparing for activation, if you were a liquidity provider building corridors, would you want the public to understand what's coming? Of course not. You would want low prices, low attention, low noise, high uncertainty, high doubt, because uncertainty keeps retail distracted. Doubt keeps retail out of the way. And low prices allow institutions to accumulate without competition. This is the part almost nobody wants to say out loud. Retail doubt is a tool. Retail distraction is a strategy. Retail underestimation is an advantage for institutions. They're not buying XRP because it's hyped. They're buying because it will be needed. And when demand based on need collides with a market based on limited supply, you get a supply shock. 6. The trigger moment, the flip that reprices everything. Every asset has a flip moment. A moment when the market wakes up. A moment when hidden demand becomes visible demand. For XRP, that flip moment won't be a news headline. It won't be a lawsuit ending. It won't be a hype cycle. It will be utility going live at scale. Utility is the most violent price catalyst in existence because it removes emotion from the equation. When billions need to move instantly and efficiently, the system doesn't ask, "Is XRP bullish today?" It simply activates. And when that activation happens, market makers scramble. On-demand liquidity spikes. Available supply evaporates. Price gaps violently upward. Retail chases the green candles, but too late. This is how assets go from unbelievable prices to normal prices almost overnight. And this brings us to the real heart of this section. The truth is, $750 XRP is not a prediction. It's not a fantasy. It's not hopium. It's a structural possibility baked into how liquidity assets function under scale. Once the system requires XRP at high price, the market will have no choice but to supply that price. And when the repricing wave hits, the supply shock will not warn anyone. It will not send a message. It will not unfold slowly. It will happen the way all financial earthquakes happen. Quiet, then instant, then irreversible. And after watching that XRP video earlier, you can feel it, can't you? That pressure building underneath the market. That quiet tension nobody wants to talk about. That sense that something massive is sitting right in front of us. But the world is still pretending it's asleep. Here's the truth. Markets don't stay in denial forever. They can ignore utility, they can ignore adoption, they can ignore global demand, but they cannot ignore math. And the math behind XRP is what brings us here today. Because whether people love it or hate it, whether they argue about charts or lawsuits or narratives, the real engine, the liquidity engine, doesn't care about opinions. Cares about function. If trillions need to move across borders efficiently, if settlement demands a digital asset with the right speed, finality, and interoperability, if institutions require a bridge asset that can scale without breaking, then XRP has to become something bigger than the price you see today. Not because of hype, not because of emotion, but because the system it serves cannot function without efficiency, and efficiency requires high-value liquidity. That's why the idea of a supply shock changes everything. Not because it's dramatic, but because it's logical. When demand increases faster than available supply, maybe it starts with a quiet candle on the chart that barely anyone notices. It redefines maybe itself. It begins with a single activation corridor, real activation, not test corridors, or maybe not just maybe it's a global shift. Will have no choice as the moment XRP stops. That's the moment where price stops and became the speculation and starts following math. The conversation you want to know the wild has been one big. We're closer to that moment than most people believe. If banks, you can feel it in the tone regulators ever catch up, in the speed of the partnerships. Those ifs are slowly turning into institutions that were allowed 2 years ago, largely resolved. In the sudden no comment energy whenever XRP's role gets too close to regulation, there's a reason catching all that to the tech. There's a reason now we're standing at the edge of something that doesn't feel like global finance keeps integrating the very rails XRP was built for. And that's why this next 4-day window feels so intense. This is alignment. Because when alignment breaks into activation happens this activation week, breaks the into setup repricing. Is undeniable. The kind of repricing people isn't waiting for permission it becomes historical. The infrastructure is ready. Here, the if you've been holding quietly, the world is almost ready. Staying patient while the world mocks the idea of a $750 if you've held XRP this long, just know the dips, the hate, you're not crazy. Waiting. You're early. And you already know if what breakdown opened your eyes. You didn't just hold a coin right now. You held a share belief. This with someone you who believed in a technology that XRP most is really laughed at. And you believed in a company that kept go deeper we get clearer, everyone else was distracted. And we uncover what the market and you believed that one day loud. The system would need what Ripple created. And now that moment is close. So don't let FOMO or fear shake you now. The next few days could bring volatility, noise, confusion. But remember, that's what happens right before the breakthrough. The noise is always loudest before clarity hits. The truth? Maybe nothing dramatic happens exactly 4 days from now. But this countdown has become more than a number. It's a marker. It's a symbol of how close we are to the next chapter of financial history. Because whether it's this week, next month, or early 2026, the narrative has shifted. The institutions are positioning. The corridors are opening. The world is realizing that the bridge asset isn't just an idea, it's a necessity. And XRP is that bridge. So instead of waiting for a miracle, prepare for momentum. Stay informed, stay patient, and understand that this next era won't be about who got lucky. It'll be about who was ready. Here's the warning I want to leave you with, and this part matters. When XRP finally takes off, it won't rise slowly. It'll happen fast. You won't have time to react. And by the time the media starts covering it, it'll already be too late to buy cheap. That's how every paradigm shift works. It rewards the silent believers and humbles the loud doubters. So while the world is still sleeping, use these days wisely. Research, reflect, prepare. Because when the lights turn on and liquidity floods in, you'll want to be in position, not in panic. This is your final reminder that patience pays, but only for those who stay ready when the signal flashes. You've waited long enough. You've endured enough. And now, whether this countdown marks the beginning of the breakout or just the first tremor of something bigger, know this: XRP's story isn't ending. It's just beginning. Because when the global reset happens, the bridges will matter more than the coins, and XRP is the bridge the world's about to cross. So get ready. The next few days could be the moment the narrative flips forever. If this video spoke to you, if you feel that same tension building, do this right now. Drop a comment below and tell me how long you've been holding XRP. I want to see how many OGs are still standing strong. And if you're new to this community, welcome. Hit that subscribe button, turn on notifications, and buckle up. Because the next few days could make crypto history, and you don't want to watch it from the sidelines. This isn't financial advice. It's situational awareness. We're not here for hype. We're here for transformation. So stay calm, stay focused, and remember, patience isn't passive. It's power. Because when XRP moves, it moves the world.